here, the CEO of Acreage Holdings. Let's make some noise for the one and only Peter Caldini.
All right, good morning, everybody. It's a real pleasure to be here. It's a great opportunity for me to give everybody an update on Acreage, or what we like to call the new Acreage. The Acreage of today is a fundamentally different company than just several years back. I think a lot of people out here know the history of Acreage. Was one of the original MSOs, got out of the gates very quickly. It was a real pioneer in the space, planted flags in a number of states, but then ran into some challenges, some significant financial challenges. But a lot of people don't know the Acreage of today. You know, over the last 18 months, we've undertaken a significant transformation with a new leadership team, with a lot of commercial experience, applying a lot of operational and financial discipline, and then really a focused strategy around our core markets and how we operate. And today, Acreage is a much stronger organization. We're well positioned to take advantage of significant market opportunities in some of our core states when you talk about New York, New Jersey, Pennsylvania, Ohio. And we also have the capabilities, and we demonstrate a track record to really be successful as the industry continues to evolve and continues to be more competitive. So let me walk you through a little bit about the transformation. Most importantly, what were the drivers? And I think it's also critical to really explain how is Acreage different today. Well, the first thing is we're profitable. So obviously in the past, Acreage, by planting flags in a number of states, pretty broad geography, didn't really get scale in any particular state. Through a lot of efforts in terms of consolidating our footprint, focusing on the most attractive states around cost containment, we achieved profitability for the first time in Q1 2021, and we just accelerated that throughout the course of the year. We finished 2021 with $25 million in adjusted EBITDA, which was a $54 million improvement versus our performance in 2020, with even a consolidated footprint. We have a new leadership team, and I'll walk you through some of the new members with a lot of extensive commercial experience. You know, people that have the ability to scale businesses, know how to operate in regulated markets, know how to consolidate businesses, and really be in a position to drive the business forward. We also have a very focused strategy, not only by consolidating the footprint, but how we operate. We focus on 3 key areas, strategic priorities, which I'll get into a little bit later. And then we have strong financial and operational discipline. You know, we had to do that, considering the financial situation we were in, and we continue to apply that same principles as we move forward. And then also we deliver. We try to deliver on our commitments. I think one of the challenges in the past at Acreage, and probably a lot of cannabis companies, I can't put just Acreage in this, is there's a lot of over-promising and under-delivering. And over the last year, certainly the beginning of 2021, we saw there was a credibility issue. We focused really on our business, getting the operations right. We didn't do a lot of promoting. We still don't do a lot of promoting, and we want our performance to speak for itself. And then lastly, it's around a strong balance sheet. I think the history is well documented, some of the challenges we had in 2020, around going concern. But we were able to really, by consolidating the footprint, divesting some non-core states, really focusing on the cost containment. And then at the end of last year, we raised $150 million in debt in very tractable, favorable terms. And that was a key milestone for the organization, really. It demonstrated that we have long-term viability of the business. It enabled us to really use those resources to drive growth in some of these attractive markets that we operate in. So what's the new Acreage? It can be summarized in really 4 areas. We have attractive footprint that are, when you talk about states like New York, New Jersey, Connecticut, Pennsylvania, Ohio, these are highly attractive states with significant growth opportunity, especially with adult use. And adult use has started today in New Jersey, which we're very happy about. But we're also very well positioned for success in these markets. We have a focused strategy, by consolidating our footprint down to 10 states from 17, but it goes beyond that. We have 3 strategic priorities around accelerating growth in our core markets. It's about driving profitability, and the third one is strengthening our balance sheet, and I'll give you a little bit more details and the key drivers for that in the past and also moving forward. We have a strong management team with experience scaling businesses, operating in these regulated type of businesses. I think we have a track record in turning around the business. I think those skills and capabilities are going to become even more relevant as the industry continues to evolve and become more competitive. And then we have a healthy balance sheet. It's the healthiest since several years back when we did the IPO. A lot of great work in that area. It's going to give us a lot of resources to build out our business, build out the capabilities moving forward. So I talked about our strategy. We prioritize our markets, but also internally in the organization, it's very clear what our priorities are to make sure everybody's aligned, and also how do you operate with limited resources. And the first area, accelerating growth in our core markets, was really defining what is the footprint we want to operate in. And a key part of our turnaround was defining what that portfolio strategy is. We wanted to define what are the states that we're going to prioritize, we're going to put our resources, they're going to give us a long-term success, the tier 2 markets, great markets, but not getting all the resources, and then most importantly, what are the non-core states that we're going to exit? Make that tough decision in terms of getting out of those states. And anytime you do a portfolio strategy, I think a lot of people know this, you look at market attractiveness, but also what's very important, what's your right to win, your ability for a long-term success. So we made a tough decision, a market like Florida. For example, Florida's an attractive market for a number of players, but for us, we lacked the scale. We didn't have the resources to build up the business. It was a P&L drag for us, and also it was using up a lot of organizational resources. So we made that tough decision to divest that state. We received $60 million in total consideration, which enabled us to put resources behind New Jersey, New York, Pennsylvania, and Illinois. So that's how we operate as an organization, very focused on the priorities of the markets in front of us. And also driving profitability. This is a key driver for us historically and will be moving forward. But just an example, in terms of getting to the improved financial performance, by consolidating the footprint, that was the first step. The second one was really right-sizing the organization. We reduced our corporate overhead, our corporate head count by over 50% since its peak in early 2020. Now, obviously, there's a lot of P&L impact. There's a lot of savings for that. But quite frankly, we had too big of an organization for the size of our business. And so by consolidating it, we actually got rid of a lot of duplication, a lot of inefficiencies in the business, and it actually improved the productivity of the organization. And we expect the profitability to actually continue to increase over time. As we start scaling in markets like New Jersey, New York, Ohio, we're going to see that profitability improve in 2022 and beyond. And then it's also around strengthening the balance sheet. We continue to focus that. I highlighted that the debt raise at the end of last year gives us the resources to drive growth in our core markets. But it also gives us the resources, and we're going to start exploring also M&A opportunities. We still see a lot of organic growth opportunities for us. It's not something we need to do. There's not the pressure, but we do see opportunities to complement our footprint in a number of states moving forward. So let me talk to you about our footprint. We operate in 10 states now. We talk about 8 of the states as core states for us, and then we really prioritize the states within those 8. I think it's anybody's guess. We're very concentrated in the Northeast, and it's anybody's guess what is the addressable market in the future, and we're estimating it's around $13 billion. I think it really depends when adult use happens, what happens with the illicit market. But clearly we're operating in some very attractive markets, and we're well positioned for success in those markets. Let me walk you through the detail of some of the states and where we have them prioritized. So key markets for us, the two key priorities is around New York and New Jersey. New Jersey, obviously, is adult use launched today. We're very well positioned in that state. We're one of 12, vertical license. We just completed our Egg Harbor cultivation expansion. We have 85,000 square feet. We're also identified a second location, which we're in the process of building out. Should be ready in the second half of next year. And we have 3 operating dispensaries, which is the max you can have in New Jersey. So we're very well positioned in that market, especially to take advantage of the wholesale market as that continues to grow. And then we have New York. We're one of 10 licenses in that state. We're expecting, or I should say we're hoping for adult use in the first half of next year. Obviously hope is not a great strategy, but I think when you talk about regulatory change, I think that's the only thing you can depend on. And we're very well positioned in that state. We have a cultivation facility. We can go up to 235,000 square feet. We're building that out in phases. Phase 2 we expect to have completed in the second quarter, at the end of the second quarter. And we have 4 operating dispensaries, and we're identifying 4 additional dispensaries that's going to be allowable under adult use. So very well positioned. These are 2 priority markets for us. And our third priority market is Ohio. It's a great market for Acreage. Today, Ohio is a medical market. We expect that there'll be a ballot initiative for adult use at the end of this year, which could lead to adult use sales in 2024. But in this market, we're very well positioned. We have 5 operating dispensaries. We just completed our cultivation expansion. We have a great team there. We're one of the top players in that market, so we're very well positioned. And we leverage those capabilities across our network in the other states as well. Connecticut's also a great state for us. We're one of the leaders from a retail standpoint. We're not vertically integrated in that state. But we're going to be looking to address that through adult use, through some social equity joint ventures or some M&A opportunities. But it's also, we're one of the leaders from a retail standpoint in that state. And just kind of highlight a couple of our Tier 2 priority markets. We operate in Massachusetts. It's a large, it's a very large, kind of aggressive market from a pricing standpoint. We're well positioned in the premium segment. We have 2 operating dispensaries and some cultivation, both of which we're going to be looking to expand the cultivation. We should have that online at the end of this year, and also add a 3rd dispensary. Pennsylvania is a great market for us. We have a smaller operations there, very much in the premium segment. I think everybody talks about a lot of the price compression, which we haven't experienced because of our pricing and the positioning in the market. There's far more demand for our product than the supply we can provide. So we haven't really been that, as impact. And then we have Illinois, which is a great wholesale market for us as well. This is the leadership team. A lot of experience in building brands, building organizations, operating in very regulated environments. My background in terms of worked in a lot of emerging markets, worked in some very regulated businesses. Steve Gertz, who's here, so you can ask him the tough questions. My CFO, he joined in the early April. And we have a number of new members to the team, really focusing on the commercial capabilities and the operational discipline that you need to operate in a very competitive and challenging market. So in summary, the Acreage, it's a different company today. I hope everybody sees that. We have a great footprint. As I highlighted, these are very attractive states, really poised for significant growth, especially with adult use. And I think most importantly, we have strong positions in those states. And we also have a track record, and we've seen this over the last 18 months, in terms of how to transform a business, how to drive profitability, how to deliver financial results. And then lastly, it's around our leadership team and our organization. We've had a track record and demonstrated success in the past. We have the skills and capabilities that as the industry continues to get more competitive, I think we have the right to win. And we also know how to scale the businesses. And, we're really excited about the opportunities at Acreage. I think the transformation is complete. Now it's really going to be about accelerating growth moving forward. So with that, any questions? Or Kevin, you got...
Peter Caldini, ladies and gentlemen. Acreage transformed, Acreage delivers. We got a couple questions, Peter, if you have time, that were sent in earlier. I'd love to get your thoughts. Now, our prior session, we had David from Canopy, who gave you a tremendous shout-out, talked about all the amazing things that you guys are doing. Just tell us a little bit more about your relationship with Canopy.
Yeah, I mean, we have a very good relationship with Canopy. We are constantly trying to find ways to really leverage, certainly Canopy's capabilities. Obviously, they're limited in terms of what they can do because of the Controlled Substance Act. But we're always looking at ways to leverage the capabilities. We'd love to leverage their balance sheet a little bit more, but that's obviously restricted. But there's a lot of conversations. There's a lot of key skills, and a lot of times people don't see it. Some of the capabilities within the organization, so we always lean into that. There's a lot of expertise in that company, so wherever we get a chance, we try to take advantage of it. Our hope is at some point, there's going to be federal permissibility, and we can operate more effectively as one organization. We're constantly trying to have to work around, some of the challenges from a regulatory environment, which really impacts their ability to operate in the U.S. But it's a very strong relationship, and I think that has actually improved as we've gotten better as an organization. I think we had some challenges in the past, but I think we've built credibility, and we're an organization I think the Canopy and organization can depend on in the U.S.
For sure. Now, one of the things you share with Canopy outside of the name, no pun intended, is extreme growth.
Yeah.
And just checking here, your revenue almost doubled year over year last quarter. Kind of tell us why. What drove the growth?
Yeah, I mean, I think it boils down to our focus strategy, which I highlighted. We really just consolidated, where we're going to be focusing, not only from a market standpoint, but how we use our resources. So we got tremendous growth in New Jersey, Ohio, also in Pennsylvania. And a lot of it really is just, like I said, it's just about focus as an organization. We got rid of a lot of the noise. Historically, I think we were spread too thin. We were focusing on the wrong things. And I think that really enabled us to accelerate that growth and really a lot around the operational financial discipline. And I think what we've done very well as an organization is we've leveraged the capabilities of each of the states that we have. And, I think when you go through the process of acquiring a number of assets, the hardest thing when you operate a business is integration. The easiest thing to do is buy something. The hardest thing is to integrate it. And, I think we've done a great job, and we were forced to because of the profitability issues that we had to get as much out of every single estate, and how do we drive that efficiency. So I think, relative to a number of MSOs, I think we operate more as one unit. And by doing that, we're able to leverage the capabilities across the different states much more effectively.
Awesome. Thank you. Peter Caldini, ladies and gentlemen.
Thank you.
CEO of Acreage Holdings. Thank you so much.